Last week we have given some insights about the syllabus content. So basically we have discussed last week what are the syllabus topic which all we are going to cover next few weeks. And as I told you, uh, this is quite easy subject you to pass, right? Only thing what we are recommending you to study uh, what we are doing in the class only. So there is no any additional reading for this investment banking subject. There is no any localized subject at the moment. So this is more than enough for you to understand and pass the exam. And before I start the lecture today, I just want to give you some insights. The incident which happened last Friday, day before yesterday, and you know that S&P, that is one of the rating agencies, downgraded Sri Lanka. And this is the third rating agency downgraded Sri Lanka this year. First Moody, second Pitch, and third is the S&P. So now we are at high risk credit category, right? Sri Lanka. So there are a lot of various factors involving by downgrading Sri Lanka, and it was various factors led to downgrade Sri Lanka as well, right? So why we are learning this downgrading? Because the examiner once tested on the rating agencies. He tested once a rating agency what is their view. Now when we are doing in investment banking subject, so sometimes you will have to make decision which company, which bank, which alternative investment opportunity you go for. For example, there are two banks available, and you are managing others' money. So you have to make a decision whether you will go for bank A or bank B. So how do you decide that? It is purely based on the rate? Is it purely based on the bank earn profit? Is it purely based on the bank management? No, you have to make a rational decision. Why? You are managing others' money. You are managing others' money. So this is very important for you to make decisions. So how do you decide which bank you select, which financial institution you select? Based on the rating. Based on the rating. Now, every institution here in Sri Lanka, most of the institution I would say, have Pitch or ICRA rating. ICRA is another local company which gives local ratings, right? Pitch is the other one. Now the S&P, Moody, and Fitch. Now the Sri Lanka downgraded. So why do they rate Sri Lanka as a country? Do they do other countries as well? Yes, they do. Why? Because they have investors. Now foreign investors have invested in Sri Lanka different instruments. It can be rupee. Now last week we have discussed whether the foreigners can invest in Sri Lanka. Yes, they can. In rupees, yes, they can. Treasury bonds, they can. Share market, they can. All these investments are in rupees. All these investments are in rupees. So basically, so then investors are expected, the foreign investors, they don't know what's happening in Sri Lanka. They don't know what's happening in Sri Lanka. So it is very important to get an idea. What's happening in the country, why they have investments. So they have invested a lot. It is important to have a third party view of a particular thing. So basically same thing we are doing as well. Same thing we do means now you know commercial bank is rated. Bankruptcy loan, People's Bank, NSB, all are rated. So then some are having triple A, some are having double A plus, some are having double A minus, like that. So based on that, there are investment grades, there are rating grades, right? There are rating grades. So basically, you can decide which one is better investment. So rating agencies gives an how much your money is secured. So what is the credit risk you are facing by investing in particular? So the default risk. Now, for example, recent downgrade, now last Friday downgrade Sri Lanka, credit risk is quite high. Default risk is quite high. So then, will the new investors coming to Sri Lanka? Very reluctant to come to Sri Lanka, and the existing investors also try to withdraw their investment. That's what actually happened in ISB. ISB is another small topic we'll be learning later. International sovereign bonds. So this is the last week we have discussed. There are two instruments, government to raise funds, dollar funds, instrument apart from loans. Loan is anyway there. It's not an instrument, but it is a method of raising funds. But as an instrument US dollar instrument, government uses locally in Sri Lanka is SLDB. You must have heard this word. Similarly, auction based, right? SLDB, Sri Lanka Development Bond. That is, they are issued locally. Foreigners can participate? Yes, they can. Anybody. And the second instrument, they go offshore, out of Sri Lanka, and they go to the international market. ISB, International Sovereign Bonds. That is another method of raising dollar funds to Sri Lanka. And ISB, now this SLDB are not traded, are not tradable instruments. Once you invest in SLDB, you have to keep it until it's get matured. Otherwise, you can sell. If somebody is there, you have to find a person who is willing to buy. Who is willing to buy one? It is not freely traded. But ISB, International Sovereign Bonds, only foreigners can invest. Locals can't. Why? The government is expecting new funds to Sri Lanka. So then ISB, they go offshore. And there are 14 billion outstanding at the moment. There are 13 bonds issued. So the rating agencies are worried about whether the government will pay this foreign debt on time, or they will default like Lebanon, like Argentina, like Greece. So then now we have settled one sovereign bond $1 billion October this year, and we have another one next year July, 1 billion. Now this is only sovereign bond. We have apart from sovereign bonds, we have another 3 to 4 billion debt to settle. So every year we have $4.5 to $5 billion to settle, liability to settle. So if you don't settle, then you will have to go to the market and reissue. Similarly, debenture in Sri Lanka. If the institution issues debenture, they'll have to settle it if they have money on the maturity. Otherwise, they'll have to again go to the market and reissue with the purpose of settling the existing one. So those things can be happen. But in now this last October, government couldn't go to the international market. Why? Rates were quite high and there is a pandemic situation. Investors are not investing leisurely in instrument. They need to keep money with their hands. So they don't want to come to Sri Lanka. And if you go to the market at this moment, it's not going to work properly. It's not going to work properly. So then government didn't go. They have used their reserves to settle this 1 billion plus interest of this ISB. Now, rating agencies think that if this is the case, if the government can't go to international, why government can't go to international market? Now you do ISB, International Sovereign Bonds. Now I told you, due to this Moody's downgrade, due to this Fitch downgrade, the people who have invested, I mean the investors or the foreign investors who have invested in ISBs, International Sovereign Bonds, they withdraw they pull out their investments. Why? Now they have, for example, now when the issue, At the initial issue, they have purchased this at 100, example, $100. So if they sell this particular instrument more than 100, that is a profit, right? You purchase at 100, now you are selling at 110, example. So you are 10 rupee, $10 profit. That's fine. Now, presently, now these investors are selling international sovereign bonds 90, 80, 60 live level. You have purchased at 100, now you are selling at 60. Is it profitable or loss? It's a loss. Why? If you keep this until it's get matured, there is a doubt whether the government will honor it. That's the dilemma, or that's the, so that's what the investors are worrying about. That's what the rating agencies are telling them. Oh, there is a possibility of default. So then what do you do? At least to recover whatever the money, so I will sell. So that's what actually happened. So we will be learning later, price and the yield, there is a negative relationship. When the price goes up, when the price, now here the present situation, price comes down 100, now 60. When the price comes down, yield goes up. Yield goes up. There is vice versa, the negative relationship. That's why ISBs are trading at 25, 30, 40 level percentage. That's why price comes down, yield goes up. We'll be learning this negative relationship when we are doing the treasury bond. Similar things, there is no any different. ISB pattern, ISB rationale is the same. Treasury bond rationale, same. Debenture local, same. Everything is same, only the name is different. So the base is same. Right? So we'll be learning later. So then that's why investors are, now you must have seen, now up pay sovereign bonds, then trade when 24%, 30%, 40% like. So when the yield goes up, price comes down. Why? People are leaving their investment, at least to recover whatever they available. Now, if we wait until it's matured, if the government default it, they don't have anything. They have nothing. Now here, if they sell it, at least they can recover less than 100, but at least something. So that's the inception. That's the perception with them. So that's why they are leaving. So when the yield goes up, when you go to the international market, with a fresh issue, so the new issue will also price at the same level. ISP දැන් යන market එකේ කීයද කියලා බලලා තමයි investors are investing their funds. And again, if there is a doubt of defaulting, if the rating agencies have downgraded Sri Lanka, then there is a doubt, there is a situation, investors also will not participate at this bond issuance. So issuance may fail. So then this is not an ideal time to go to international market. So that's why government has decided not to go to international market, and they have paid the recent October sovereign bond out of their internal reserves, gross reserves, dollar reserves, right? Right. So that's the impact we'll be having. The impact is important. So when the country is downgraded like this by 3 rating agencies, what are the impacts? So basically, when you go to the international market to raise dollars, high cost. People won't give money. Some banks are facing the banks difficult to borrow from international market. Now we are actually in C category, high risk credit, high risk. So very difficult to go to the international market and raise funds. And the bank also suffering obtaining loans, and the investors won't place their funds, and limits is also cut on banks and financial institutions. Cost is quite high. So if they don't have money, if we don't have sufficient dollar amount, how can they honor our dollar payments? So can we refrain from importing oils? We can't. We'll have to. Can we restrict importing essential goods? We can't. We need dollars. How do have dollars? One is tourism. Tourism is not there at the moment. FDIs, remittances, export. all these dollar supply has come down drastically. So then when you don't have supply, but when you have a demand, so there is a problem. More demand, less supply. The price also going up. So we'll have to find out somehow money to honor this. So if you don't have money supply, then you will go and borrow from the international market. So borrowing is also curtailed by downgrading Sri Lanka by these three agencies as well. So little difficult situation, right? So we'll see what will happen. Now presently we are having a 5.8 billion dollar reserve. So we'll have to keep it. So basically countries reserve amount is basically tell us how much import can be made without having any dollar. So basically we'll be having four months imports only. So if you don't have any dollar income, we can import 4 months worth of imports to Sri Lanka by using this reserve. So it's very difficult situation, but we'll see what will happen. So important note here, so we should have kind of someone can test you the impact of downgrade in Sri Lanka, because three agencies have downgraded Sri Lanka at the moment within a 3 month period. September Moody started. Now by December, 3 months period, all three agencies have done. When you downgrade a country, it's very difficult to upgrade. So you have to the big way to upgrade. So easy to downgrade, but very difficult to get in an upgrade. Right? So as a student, you should have a kind of knowledge why these rating agencies have downgraded, why this downgrade meaning. So what the downgrade means to you. So basically the dollar payment we'll have to make during next period, next year onwards. So the rating agency think that we will not be able to honor. So that's why they have downgraded to Sri Lanka. Right? Now this is the marker. Now coming back to our lesson now. And last week the people are not here. I have told you to start read the daily FT paper whenever possible. It gives a lot of insight, right? So you can get an idea what's happening around you here in Sri Lanka and the globe. It's very important to get an idea what's happening. And now we are actually learning alternative investment opportunities. So there we will be learning treasury bill, treasury bonds, debenture and all this. Why we are learning? As we discussed last week, so we are actually learning these are alternative investment opportunities. So somebody comes and tells you, I have this much of money, please invest on behalf of me. So then you will have to know, you should know what are the instruments available in the market. Why are we giving, why you are given money to manage, they need return from that. So the return can be earned by investing different instruments. So then you should know what are the instruments available for you to invest. We'll be learning some instruments. So this is the first instrument. This is the basically our discussion is based on these markets: money market, capital market, foreign exchange market, derivative markets, and commodity market. So now this money market. Under money market, we'll be learning treasury bill, reverse repo, and also you can write down commercial paper as well. Commercial paper is also short term, right? And money market, everything will go off within 1 year. Finish. Everything will be finished within 1 year. There won't be anything other than this. That's why it says money market, short term. And again, you will be having capital market. That is more than the 1 year generally. treasury bonds, we'll be learning treasury bonds and equity. So basically now somebody can ask, treasury bond is always more than 1 year. No. Can't I invest in a treasury bill which is maturing within 1 year's time? Yes, you can. So what does it mean then? You said more than 1 year. So initially, if it is treasury bond or debenture, you will be issuing for more than 1 year generally. So then we call it capital market instrument. Now, for example, now we have issued, now say your bank issue a debenture. Now last week we have discussed the name is only the difference. Treasury bond and debenture. Treasury bond, treasury debenture, similar instrument, similar features, but the issue is different. Treasury bonds are issued by Central Bank of Sri Lanka on behalf of the government. Debentures are issued by your private institutions. So that's the difference. The features are the same, right? And there was a question in exam. Examiner asked generally what is generally. Now the word is generally. What is the frequency of treasury bond interest payment? Interest payment generally. Now you must have seen. I'll be showing it to you later. Debentures, there is a word called coupon interest rate. There is an interest. When you invest in debenture, you are paid interest. So we call it coupon. Coupon interest. Coupon interest rate, or the coupon can be paid for debentures. If you want, now you say your bank issue debenture. You can have coupon repayment, coupon payment annually. You can have semi-annually. You can have quarterly. You can have monthly. It depends on you, your requirement, your ability. But if you take treasury bond, it's always semi-annually. There is a coupon, both the instruments, but only the pattern is different. Debentures, you can have semi-annually, similar. But treasury bond is always semi-annually. Always. That's the word. And examiner also tested that question. It says generally. Right? So there are questions like that. So basically, treasury bonds will be learning semi-annually, coupon interest, right? So now, for example, now we say now there is an instrument for debenture treasury bond issued 5 years ago. Today now 2020 December. Applicable 2015 December 30th shoot. So that in 2020 December 30th only it completes 5 years. Example. Now I want to sell this particular. I have invested in this particular debenture. Now I want to sell. I can't wait another 10 to 20 days. I need money. I need to sell this. If I wait till 30th, then I can have the entire thing. Now I need to sell. I need money immediately. So then you sell it. So I am willing to buy. Which one? Treasury bond. What is the remaining maturity period? Only 10 days. From today to 30th. 20 days. Or less than that, right? So it is a treasury bond. But it is less than 1 month. But we are here telling it should be more than one year. But initial issue, it should be more than 1 year, right? But the remaining maturity period, it can be less than 1 year. Now here there is no even 30 days, month to even. But you are buying a treasury bond. That can be happen. That is happening actually in the market as well. Treasury bond, which are less than remaining maturity period 1 year, it's trading. Yes, it's trading. It's trading. So it's still a treasury bond. But initial issuance is more than 1 year. Remaining maturity period, when we are doing the calculation for this treasury bond, we are taking only the remaining maturity period. So I'm interested that only. ඉස්සරහදී මට තව කොච්චරක් තියෙනවද මේකේ හම්බ වෙන්න. එහෙනම් මම මේ දවස් ගානට What is my return? That's what I need, right? When you are a purchaser, when you are an investor, that's what you need. The remaining maturity period is important. Remaining maturity periods can be less than 1 year for treasury bond as well. So the shares. So we'll be learning is interesting subject, shares now these days. Equity market. Shares is also important. We'll be learning shares as well, right? The shares is anyway, there is no maturity for shares. Other instrument you have maturity, but shares we don't have maturity. That's the beauty of this particular instrument. There is no maturity for shares, equity, right? Share market will be learning lot of technical words. So the what kind of markets an examiner has tested that very often these terms. If your bear market, bull market, and also the malpractices done by brokers and indices, ACI, ASI, and all share price, and then the S&P and the boards. There are several boards. D07 boards, main board, multi-currency board, empower board. Now there are a lot of REIT recently introduced one. So there are a lot we'll be learning later when we are coming to shares. And also we will be learning how do we invest in this particular instrument. And last week I told you now the banks are doing these investments, but using whose money? Your money. So you are doing you are basically depositing a FD or a savings account. So the bank uses in different ways. Why can't you use? So that's a problem we are having. I know, I'm 100% sure that a lot of students have this share market instrument, share market investment, but I'm encouraging others also to have this investment. Then only you can see what's really happening. So you get dividend. So then if the examiner asks you by investing in shares, what is the compensation you get? For 2 marks question, possible question. So one thing is dividend. Why you know? Why you are getting a check? Oh, your account is credited. Now you know that. So by investing in shares, I am getting dividend. By investing debenture, am I getting dividend? No, I am not getting dividend. I am getting only the interest income. See the word different. By investing shares, I am getting dividend plus capital gain if I sell it at a profit. By investing government securities, I am getting interest plus capital gain if I am selling at a profit. We'll be learning the how do you make profit by selling. All these instruments are tradable instruments, readily available market. So you can sell at any time. Liquidity is there. You can sell, but only thing you will have to take a decision there whether you will be selling at profit or loss. It doesn't matter. These instruments are liquid. If you say liquid, you can sell either profit, either loss. But you can sell, you can realize the instrument. So that is liquidity. So the liquid instrument, you can sell you can sell this instrument in the market so easily, right? So capital markets we'll be learning later. Foreign exchange market also we are touching under proprietary trading. You have a topic in the syllabus. Proprietary trading will be learning not in depth, but for the purpose of exam, to be sufficient to the exam purpose, we'll be learning foreign exchange market, and I have explained why this foreign exchange market will have to learn even we are working in the investment banking division. Now say foreigner comes to Sri Lanka, they need to invest in Sri Lankan rupees, then you need some conversion to happen, and also you need to give the foreigners to hedge their investments, right? So we'll be learning later with an example how do you hedge this, what is their foreign exchange exposure and everything, right? Derivative market, and this is not coming under your syllabus, but examiner has tested once for 2 mark question. Derivative options, derivative instrument. The most popular derivative instrument is what? Forward exchange contract. When you're working in the bank, you know people are importing vehicle, not now, but whatever the instrument they need to import, They're opening a forward contract. They are entering into a forward exchange contract. The forward exchange contract is the instrument. It's a derivative instrument which you hedge the foreign exchange exposure. So today you book it with the manager, but you have to pay after 3 months time. So why you book it today for the 3 months payment? You're not sure what will happen to your currency. If the currency goes against you, then you are losing. You are exposing to foreign exchange risk. Now remember that these derivative instruments are not there to earn profit, but to minimize the loss. You can't avoid the risk. It depends. 185ට අද තිබ්බ එක මම හිතනවා 190 වෙයි කියලා මාස 3කින්. මම මොකද කරන්නේ? දැන් මම බුක් කරනවා. මම ඉම්පෝට් කරනවා. 185ට තියෙන එක දැන් මට දෙනවා 186යි කියලා දෙනවා බැංකුව. හොඳයි ඒකයි. මම හිතනවා මේක මාස 3 190 වෙයි කියලා. ඒතර මට 190 ගන්න තමයි ගෙවන්න වෙන්නේ. හැබැයි මේක 195 වුණොත් එහෙම I am satisfied. I am happy. Why? I have to pay at 186. Now the market is now 195. Whereas I am paying, since I have entered into a contract, I think I have to pay at 186. Now say after 3 months time, exchange appreciated and came down to 180. මට පුළුවන් දැන් මං 186 මට ගත්ත එක 180 නේ දැන් මාකට් එක මට බෑ මේක ගෙවන්න බෑ කියලා කියන්නේ. No, you can't. You have to honor it. Even you can raise money from can borrow from the local market at 180. You can't. You'll have to honor it at 186. So you are losing. If you are not entered into a forward exchange contract at that time, you are benefiting. Why? You can buy dollars from the market at 180. Since you have entered into this forward exchange contract, you will have to honor. You have to make this payment at 186. So that's why I told you derivative instruments are not there to earn profit, like insurance. Like insurance, you're not sure. It can come either your side or bank side. Right? We'll be learning. But remember, even the examiner tested you. I have given these instruments description in the notes. But that's why I told you it is very important for you to go through the contents of this note. Right? Contents of the examiner has tested on options. But generally, options are learning under financial market operation subject, right? So as a hedging instrument, we'll be learning not in depth, but we'll be touching that instrument as well, right? And commodity market is not available in Sri Lanka, so that we'll be not learning. Gold market, like, so not sophisticated market. And foreign countries, yes, very much sophisticated market, very much tradable market, other countries, right? So this is a nutshell what we are going to do with you all, and these are the only markets available in the world. Any instrument, any financial instrument should come under this. Now I have given you only the localized instruments, and there are many instruments, but it should come under these 4 category markets. Now I have not mentioned SLDB here, Sri Lanka Development Board. It is an instrument the government issued, or the central bank issues on behalf of the government to raise dollar funds. From whom? I'll be showing it to you. Locals also can buy, even a foreign NRFC customer, non-resident customer. If you have a PFC account, you can invest in SLDB. If you have dollars, you can. That is for local, and as well as the foreigners also can invest. I have not mentioned here. So there are instruments there. That is capital market. Why SLDB has not included? It can be sometimes it is also auction based. Sometimes government issues SLDB less than 1 year. Generally it is not, but it can be happen. So then we are not sure whether it is a money market instrument or capital market instrument. Generally, they go 1 year plus. Now, recently we have seen 1 year and 2 months like that. Very odd. So they don't. Sometimes it can be. So I have. That's why I have not included SLDB here. I have mentioned only the under capital and money market. I have included only the rupee instrument, right? And yes. So understood. These are the instruments we'll be learning. Now these instruments are important why we are learning. Examiner can test you for 2-mark question on the money market instrument. Is this a money market instrument? Is this a capital market instrument? You can. And there are questions not in your exam but financial market operations syllabus. They have a lot of question on money market instrument and a lot of question on commercial papers as well. So we'll be learning, we'll be taking all these questions with you all, right? Don't worry about. Right. So then, and the important thing is why we are learning this instrument. You need to invest in alternative investment opportunities. අපි දැනගන්න ඕනේ අපිට සල්ලි තිබ්බහම දැන් අපිට කෙනෙක් ඇවිල්ලා සල්ලි දුන්නාම අපි බාර ගන්න එක අපේ කාර්යයක්. We have learned last week. Your syllabus also tells you wealth management, fund management is done by you, investment banking people. So I am giving my funds to you. You manage on behalf of me and give me a return. I give you fee. That's the agreement. So mama lakh million 10ක් දුන්නාම you should know what are the instruments you should invest. ඒවා තමයි what we are learning now. Treasury bill is one instrument. Then you have to decide how much I put in treasury bill. That's your call. ඒකට ඔයා දැනගෙන ඉන්න ඕනේ interest rate මොනවද වෙන්නේ ඉස්සරහට. Inflation එක මොකද වෙන්නේ? මට මෙයාට මේ return එකක් දෙන්න පුළුවන්ද? මිනිහ මනුස්සය ඇවිල්ලා කියන්නේ FD එක දැම්ම නම් හොඳයිනේ මේ ඕගොල්ලන්ට දෙනවට වඩා කියලා. එහෙම අහගන්න ඕනේද මම? So all these things you should learn. So that's why I told you this is very live subject. You are learning what's happening. Now, for example, now 1 or 2 years ago, treasury bill was a very good instrument. Treasury bill was a very good instrument for you. Now it is not. Now 1 year treasury bill goes at 5%. So then you should decide, am I investing this guy's money in treasury bill? I'm earning only 5%. Then that is important. Then again you have to decide, should I go to 3 months? Should I go for 6 months? Should I go for 1 year? If I put it for 1 year, treasury bill, example, after 3 months time, interest rate started to go up. So what do? But your investment is 1 year. අපරාධ මට 3 months දැම්ම නම් ඉවරනේ කියලා you must have thought. හිතෙන්න පුළුවන් එහෙම. So then you should have a sense of interest rate, future interest rate. So that's why I told you, it basically depends on the market condition. Depends on the market condition. You can't always say, this is my percentage of investment. 10 million හම්බුණා මම 5% දාන්නෙම treasury bill. You can't say that. If you don't want to go for a risk, that's fine. But think about the yield as well. You have to balance it, right? So at least now in this fund management, generally, we are not promising any yield. Wealth management, fund management, they're not promising any yield, but generally people are expecting to have more than the fixed deposit or treasury bill rate the yield. Otherwise it වැඩක් නැහැ. Treasury bill FD එකකටවත් වඩා මට yield එකක් හම්බෙන්නේ නැත්නම් මම investment banking එකකට මගේ සල්ලි ටික දීලා manage කරන්න වැඩක් නැහැ. I should have put it in FD. එහෙම වැඩක් වෙන්නේ නැහැ. එතකොට ඒකේ වැඩක් වෙන්නේ නැහැ හැම. So the investment banks are giving more than the generally FD rates, more than the FD interest rate. Otherwise, no point. Without having any risk, මොකටද මේ fee එකක් ගවන investment banking people මිනිස්සුන්ට මට පුළුවන් FD එක දාන්න. So then your business is basically depends on your decisions. Remember that. That is important. So that's why we are learning everything. So what we are discussing here and what we are learning, each and every word is important. Right? Now this morning we have discussed rating downgrade. Is it important for you or not? Yes, why not? It's important. When the rating is downgraded, what will happen to the interest rate? If the government can't, if the people can't borrow from overseas branches, overseas international market, so what will happen? Now budget deficit is important or not? Important. How does the government is going to fulfill this budget deficit? Is it domestic borrowing? Is it low foreign borrowing? Now we know that generally now this time budget is going to be filled, gap is going to be filled with local domestic borrowing. When the government started to borrow from the domestic market, what will happen to the interest rate? You should have everything. You should be alert on everything, vigilant everything. So the interest rate can be changed. Now this low regime interest rate can be changed overnight. I'm not saying overnight, but the government intention is to at least go this low regime interest rate for 2 years at least. So we don't know. We'll see now. We actually now the AWPLR is 5.71 now. It has come down drastically. Right? You know, FD rates now presently at going at how much? 525 lakh level. It was at once 13 level. Right? So the interest rates have come down drastically. So the people who have invested at that time long term, they are benefiting. That's good. Even the lower regime interest rate, they are earning. Why? They fixed deposit means fixed interest rate. But if you thought that I should go for 3 months or 6 months, the repricing happens after 3 months time. Then again you will have to invest at a lower rate. So that's a reinvestment risk. We'll be learning now. Even this treasury bill government securities, we say risk free. There are some other risks. Which risk is not there? Now we say treasury bill, treasury bond, government instrument. Risk free instrument. Now we'll be learning later under project appraisal, capital asset pricing model, CAPM, capital asset pricing model. There you have to take risk free rate. Risk free rate examiner gives you always treasury bill or treasury bond rate. Why? Any government, we presumption that any government will not default, but there are governments who default. But general presumption is governments are not defaulting. So that's why we call risk-free instrument. Which risk is not there? Credit risk or default risk. Are there any risks involved in government securities? Yes. That's the question examiner can tell you. What are the other risks? Reinvestment risk we just discussed. You put 3 months treasury bill investment. මාස 3කට පස්සේ ආපහු ඔයාට මේ සල්ලි හම්බ වෙනවා. එතකොට මොකද කරන්නේ? ඔයා මේ සල්ලි වියදම් කරන්නේ නැත්නම් ආයි මේක ඔයා ඉන්වෙස්ට් කරන්න ඕනේ. එතකොට you go to the market and watch, see the interest rate. Now you have invested that 4% example. It's 3 months treasury bill එක දැම්මේ 4% කට. මාස 3කට පස්සේ ඇවිල්ලා බලනවා ආයි මම මේක ඉන්වෙස්ට් කරන්න ඕනේ. දැන් මාකට් එක බලනවා 3.5. දැන් 3 months ගත්තා නම් මට දාන්න වෙන්නේ කිය 3.5. Any default risk? No. Government paying you. Any credit risk? No. Interest rate risk? Yes. හතරට ගත්තාම මේක දැන් ඉන්වෙස්ට් කරන්න 3.5. Interest rate risk. You are exposed into interest rate risk. You are exposed to reinvestment risk. මම මේක initially මේ 3 months treasury bill එක දානකොට මේ inflation එක 5%. දැන් මාස 3කට පස්සේ මම ඇවිල්ලා බලනවා දැන් ඉන්ෆ්ලේෂන් එක කීයද 10%යි. ඉන්ෆ්ලේෂන් රිස්ක් හම්බෙන ගන්නට වඩා ඉන්ෆ්ලේෂන් එක සාමාන්‍ය අපි දැන් 100ට අපි කියමු 10ක් හම්බ වෙනවා නම් මොකක් හරි ඉන්ස්ට්‍රුමන්ට් එකකින් අපේ රටේ ඉන්ෆ්ලේෂන් එක 5% නම් your what real interest is 5%. ඒක අඩු කරන්න එපා. Now 1 year treasury bill I told you exact rate is 5%, but that is auction rate. Huh? Auction rate. Auction rate means that we will be learning now. Auction rate එක 5% නම් customers ළම ඊට වඩා අඩු වෙනවා. Now what inflation now? 550. So you can't compensate the inflation as well by investing in treasury bill. So there are situations like that. There are situations like that. So then everything you have to take into account. You have to take into account all these economic factors. Very, very important when you make a decision. And this is important for you as well, your life as well. So rather than, so should I put everything in FD? Why can't I have more than, but why can't I have investment in shares? Why can't I have investment in treasury bill, bonds? Can make a decision there, right? Now, treasury bills. Now you know why we are learning this. What is the importance of learning this treasury bill? This is a government instrument. This is the government instrument. Government is issuing to raise money. From whom? General public. Upping. Government එකට අපෙන් සල්ලි ගන්න ඕන නම් government එක මේක issue කරනවා. 3612 short term instrument. ඔක්කොම ඉවරයි අවුරුද්දකින්. ඔක්කොම ඉවරයි අවුරුද්දකින්. 3612 auction based. Auction එකක් තියෙනවා. I'll show it to you. We have discussed last week and this is auction based. Every Monday government or the central bank publishes a advertisement. 3 months වලින් මට කොච්චරක් ඕනේද? 6 months වලින් මට කොච්චරක් ඕනේද? 1 year වලින් මට කොච්චරක් ඕනේද? I'll show it to the latest advertisement next week. Then you have auction on Wednesday. Who can be participated at the auction? Can you participate? Can I participate? No. Then who? ඔක්ෂන් එකට දැන් අපි ඔක්කොටම පාසිටිපේට් වෙන්න උනා මොකද වෙන්නේ මුළු රටේම ඉන්න මිනිස්සු ඕකට පාසිටිපේට්. ඒතකොට මේක රේට් එකක් ගන්න හම්බෙන්නේ නැහැ සෙන්ට්‍රල් බැංක් එකට. So there are privileged section of the privileged set of the people available in the financial market. We call them primary dealers. There are 10 primary dealers at the moment. There are some banks. There are some non-banking institutions as well. Right? So these people can be participated at the auction. 3 months, 6 months, 1 year. So when the auction, at the auction, there is a minimum amount they'll have to put. 3 months, අපි කියමු 1000 කිල්ලුව නම් minimum 10% දාන්න ඕනේ එක primary dealer කෙනෙක්. Minimum. So that's why they have been given the license. They can't say no, මේක rates අඩු වෙනවා, මට සල්ලිත් නැහැ, මට දාන්න බෑ. You can't say that. Only 10 people are privileged to participate at this auction. You can't say that. You have to. So every Wednesday you have auction. After 2 days time, T+2 we call it. T+2 transaction date +2 is the settlement. So the Friday is the settlement, provided that in that week there are no holidays. සමුද පබ්ලිෂ් කරනවා බදාද auction Wednesday settlement බදාද auction එක 11ට ඉවර වෙනවා. ඒ කියන්නේ you can put bid until 11 am. So you will be the central bank is releasing their results by 2 p.m. So then you know how much you have to pay on Friday, how much your bids are successful. On Wednesday 2 o'clock you will be receiving that information. Then බදාද මේ result එක ආවම Friday සල්ලි ලෑස්ති කරගන්නවා. Friday you have to settle it. හැම දාපු bid එකක්ම accept නොකර ඉන්න පුළුවන්ද බැයිද? පුළුවන්. It's an auction. මම කියන price එකට government එක සල්ලි ගන්න කැමති නැත්නම් government can reject it. Simple. right? So there are 10 primary dealers, all put their bids separately. එතකොට කොහොමද මේ එක රේට් එකක් එන්නේ? So this rate is weighted average. So there are 10 people, 3 months අපි කියමු දාන්න ඕනේ කියලා 100. Everybody has to push 100. Why? 10% is the minimum. 1000 තමයි government එකට ඕනේ. 1000 million. So each primary dealer has to put then how much? 100 million each. How many? 10. මම primary dealer කෙනෙක්. මම හිතනවා 3 months treasury bill rate එක මේ පාර නම් පොඩ්ඩක් තවත් පල්ලෙහාටයි මම ඒකින දානවා 4. තව එක්කෙනෙක් හිතනවා නෑ මට මේවන්න හිතන පොඩ්ඩක් උඩට යයි. මම දානවා 4.25. තව කෙනෙක් හිතනවා මම හිතන්නේ ගිය පාර රේට් එකම තියෙයි. මම දානවා 4.10. ගිය පාර රේට් එක 4.10 example only 4.10. So the different primary dealers, different rates. Possible or not? Yes, they can. Legal. Why? This is an auction. Auction can own a bond that තමන්ට ඕන price එක තමන්ට present කරන්න පුළුවන්. It is up to the issuer. It is up to the central bank. යාට සල්ලි ඕන නම් මගේ 100 මම දාපු 100 හතරට ගන්න එක central bank හිතනවා නම් මේක හොඳයි කියලා you take it. 4.15ට දාපු 100 එක central bank හිතනවා නම් ගන්න ඕනේ කියලා they can take it. අපි කිව්ව මෙයාට ගන්න ඕනේ 1000 වුණාට මේ මිනිස්සු ගොඩාක් උඩින් තමයි මේ රේට් දාලා තියෙන්නේ. එහෙනම් අපි ගන්නෙ නැහැ. අපි ගන්නෙ 200යි. එහෙනම් එයා අඩුම 200 තෝර ගන්නවට 10 දෙනා දාපු. That's the method. Very simple method they are using. මම දැන් මේ 4ට නම් මගේ 100 තව කෙනෙක් දැන් මේ 4.25ට නම් 200 million Central Bank has invested over the 3 months treasury bill at one rate. How do you do it? You weight it. You weight it. 4.25 into 100, 4.75 into 100, then you divide by 200. We'll be learning later how this weighted average thing comes into the picture. But for the time being, you learn it. Keep it in mind. There are 10 people can be participated at the auction, different prices. But only thing is you have to keep in mind, examiner has not tested this. Why this weighted average? Why it says weighted average? Weighted average means you weight it according to the rate and the amount, and you give a one rate. So that's why treasury bill rates, I'll show it to you next result it as well. Latest result. That's why treasury bill 3 months, 6 months, 1 year has odd rate. Now, for example, FD rates ගත්තාම 3 months එක 4.75යි මොන හරි. 4.76 අපි කියන්නේ 4.77 කියනවද? No, we don't. සාමාන්‍ය quarter percent තමයි අපි කියන්නේ. 5.02 කියලා කියනවද? No. We don't say like that. But treasury bill, treasury bond, yes. Why? Different people can put different rates, different pricing. So when you weight it, then you should have weight it. You should have, generally you have odd rates, decimal points. That's the pattern. That's why you go and see central bank website. You can have treasury bond as well, the treasury bill, treasury bond, weighted average rate as well, or the odd rates. Now yesterday or the day before yesterday, there was a treasury bond auction. 12-year treasury bond. That is 2000. 12-year again 32. Bond weighted average rate 7.84. 7.84. It is not 7.85. 7.84. Odd amount, odd rate. It can be happen, yes. Why you weight it? The examiner has not tested this weighting part so far. And I must also tell you, examiner has not tested anything on treasury bill pricing. Treasury bond pricing, yes. Treasury bond pricing is a little lengthy calculation. We'll be learning later. Treasury bill calculation not tested. So this is a high chance of testing. Now there are 3 exams to be held. Under this new syllabus started 2014 September. None of the examiner has tested treasury bill pricing. I don't know why they have not tested even any exam. Financial market also they have not tested, and financial market operation. Now this financial management, so also kind of similarity this we'll be learning when we finish when you towards the uh, finish of this syllabus coverage. I will be taking some exam questions from financial management subject as well. So I'll show it to you. There are some related questions from that subject as well, right? But only thing is there are some questions when you are doing the questions you will be understanding there are repetitive questions, lot of repetition. If you have done the if you have doing the past paper and the syllabus we are covering with this by this manner, we are learning, studying past papers plus this more than enough for you to pass this exam. 100% guarantee. I have seen and I have been told some students, right? So once I have presented two students who have passed their exam. So I have told them to explain how did you study. And I must tell you one student they have now he has not studied from the beginning. The general pattern is that everybody is similar. Now how many times we ask you to study? If you don't know something, please let us know next class. People are not saying, students are not like that, so they have more important than this. I'm not asking you to study now. This is too early. Too early. But only thing what I'm suggesting is just have an idea. So we have learned treasury bill කියලා මොකක් කර එකක් we have learned නේ කියලා දැනගත්තට යම this is enough. So when you are recapping, we are refreshing towards the end of this syllabus or the term. I'll be recapping everything. And we are planning to do 2 mock exam with you all and some before that refreshing questions as well with you all. So you can catch up. But only thing if you don't know anything on this treasury bill, then if I started to first time here, then the problem. But I'm asking you to remember that we have done this. Then you can go back to your notes and study it. So that's important. You don't want to buy hard these things. But I'm suggesting if you want to have a sense of this, study this and try to invest treasury bill. Your bank, your financial institution, you can have this easily. You have to speak to one of these primary dealers. I'll show you. It is available on the advertisement. Commercial bank, you have the primary dealer, Bank of Ceylon, People's Bank. NSB is not a primary dealer, but NSB Fund Management, the primary dealer. HNB is not a primary dealer, but Equity is fully owned subsidiary of HNB is a primary dealer. You have Equity, you have what do you call this? Interest is not there now. The recently government canceled the license of. Actually, they voluntarily wanted to cancel their license in April. You have wealth trust now, First Capital. All these are primary dealers. All these are primary dealers, and you know there is no any foreign banks as primary dealers. There are no any foreign banks as primary dealers, right? So then how you must have a question: how does this foreign investors are investing? Foreign bank primary dealers ලා නෙමෙයි නම් කොහොමද එතකොට මේ foreigners ලාට ඒගොල්ලෝ මේ primary මේ treasury bill අරන් දෙන්නේ? They can use existing primary dealers. Now I told you who can be participate at the primary auction. Primary dealers. You and I can't. But if I have 5 million rupees, I can tell one of these primary dealers, okay, I have 5 million rupees, I give it to you, you bid on behalf of me at this rate. මොකක්ද ඒක වෙනස? ප්‍රයිමරි මාකට් එකට යන්න පුළුවන් කාටද? ප්‍රයිමරි ඔක්ෂන් එකට යන්න පුළුවන් ප්‍රයිමරි ඩීලර්ස්. ඒතර මම ගිහිල්ලා ගන්න මාකට් එක මොකද්ද? මට ඉන්වෙස්ට් කරන්න ඕන නම් මම ට්‍රෙෂරි බිලක ඉන්වෙස්ට් කරන්න ඕන නම් අපි ගිහිල්ලා ගන්න මාකට් එකට we call secondary market. That's the word. So the primary market is between whom? Primary dealer and the central bank. So the secondary market between whom? Investor and the primary dealer. That's the difference. But we are actually going to secondary market. So can't I participate in the primary market? No, you can't. Why? You are not a primary dealer. But there is exemption. Examiner tested this. If you have more than 5 million rupees, you can tell one of these 10 primary dealers, okay, I have this. You invest on behalf of me at this rate. What do you mean by at this rate? You dictating your rate. But if you go to the secondary market, can you dictate your rate? You can't. Hey, how the dictate කරන්නේ? Primary dealer තමයි dictate කරලා දාන්නේ එයාගේ rate එක auction එකට. Auction එකේ එයාගේ bid successful වුණාම එයාට දෙනවා rate එකක්. ඒතර එයා ඒ rate එක තමයි එයාගේ rate එක. එයා ඊට වඩා එයා පල්ලෙහෙන් තමයි secondary market එක අපිට විකුණන්නේ. මොකද he has to keep a margin. 4.50ට ගත්ත එක 3 months එයා විකුණනවා 4.25ට ඔයාට. I 25%. The primary dealer keeps the margin, profit margin. But for secondary market එකට යනවා ඔයාට ගන්න වෙන්නේ 5 million for 25. හැබැයි if you have 5 million or more, you can tell one of these primary dealer before the auction, ඔයා මගේ සල්ලි දාන්න මේ 5 million දාන්න 4.75. Can you say that? Yes, you can. What's the threshold limit? 5 million rupees. It is available on the advertisement, which I'm going to show it to you next week. So remember everything. Now examiner recently tested. It's a 5-mark question, right? It's not a 2-mark question, 5 marks question. The answer should be, it's more than if it is 5 million rupees with you. You can ask, you can't participate directly. You can't participate directly, right? Remember that also. If you can't participate directly, but if you say now you go to commercial bank, and it's a primary dealer, commercial bank would work, you know, මගේ ළඟ තියෙනවා 5 million, 6 million තියෙනවා. ඔයා මේක මම 4යි ඔයා මේක 5ට දාන්න 3 months special bid. So they put bid on in their name only, right? Your name will not appear. Commercial bank එකේ bid එකක් විදිහට තමයි ඒක යන්නේ auction එකට, central bank එකට. ඒක successful වුණොත් ඔයා central bank එකකින් ඔයාට හම්බ වෙනවා, commercial bank එකට හම්බ වෙනවා, commercial bank එකත් customer දෙනවා. Same rate. There is no margin there. Right? So then somebody, now you must have thought, I told you this example, 4.50 තමයි weighted average එක හම්බුනේ central bank එකේ primary dealer, but primary dealer gives us at 4.25. Why the rate has come down? When I talk about this morning, I told you when the rate comes down, price goes up. 100ට හම්බෙච්ච එක, ඒතර price goes up means price එක වැඩියෙන් තමයි විකුණන්නේ. ඒතකොට යාට ගේන්න නැතර we'll be learning everything later. Don't worry about, but remember 4.50ට හම්බෙච්ච එක අඩුවෙන් දුන්නොත් තමයි මට profit එකක් හම්බෙන්නේ. සාමාන්‍යයෙන් ඒක වෙන්නේ දැන් ඇත්තටම ලංකාවේ treasury bill, treasury bond, debentures වගේ ඒවා ඇත්තටම we go by the yield, not by the rupee value. Rupee value එක මත ගියා නම් අපිට easily කියන්න පුළුවන් මම 100ට ගත්ත එකක් 150ට වික්කොත් මට profit 50ක්. මම 100ට ගත්ත එකක් 80ට වික්කොත් මට loss 20ක්. Understood? Simple. මොන හරි භාණ්ඩයක් ගත්තොත් එහෙම 100ට මම මේක ගත්ත එක මම දැන් අද විකුණන මගෙන් ඇවිල්ලා ඉන්නවා 100ට. මේ 110ට. එහෙනම් මම selling මම sell කරන රුපියල් 10ක් මට ලාභයි. හැබැයි මොකක් හරි instrument එක දැන් treasury bill, treasury bond වගේ instrument එකක් ගත්තා මම මේක invest කළේ 10ට. දැන් කෙනෙක් මගෙන් ඇවිල්ලා ඉල්ලනවා 6ට. How can I decide whether this instrument is profitable me to sell or loss? Percentage wise we are dealing with. 10% I have invested. Now he's asking at 6%. So Komal, how do I decide the monetary value? We'll be learning later. So that's the difficulty here. That's the difficulty here. Not in India, it's go by monetary value. It's easy. මෙහෙම yield එක base කරලා ගියාම we'll have to convert this yield into price. So we'll be learning price, and as I told you, price and the yield relevant to this government securities or the fixed income securities. That's the word. Now remember that word, fixed income securities. May securities ඔක්කොමගේම income එක fixed. Treasury bill, treasury bond, debenture, fixed income securities. General term. The examiner asks you fixed income, name 3 fixed income securities for 2-mark question. Now last week students are not there, some students are not there. I told you there are some terms which I am using during the lecture not available in your notes, but I'm requesting you to write down which is not available in the tube. But you can later also you can watch this video and have it and write it down, and this is the important words you have, right? Now these are the features treasury bill. So they are auction based, 3612, everything will finish within 3612, auction based, right? So if you don't have any holidays during the month, during the week, you can have this easily. You can have this as it is. You can have this as it is. So then the Sunday you have this. Monday you have the auction. What do you call this? Advertisement. Wednesday you have the auction. Friday you have the settlement, right? So that's the pattern. You should understand. Examiner has not also tested the auction pattern as well, right? So this is auction pattern. So the auction pattern is 10 people put this at the moment. 10 people. Now 10 people in the sense, now Wealth Trust also has given their willingness not to participate at the auction. So then we will be having the updated list next week. I'll show you whether it's 10 or 9, right? Sometimes it can be 9 as well, right? So we'll be learning. I'll be showing it to you. I'll be giving a note on that as well. The advertisement, so you can get it printed. So understand this. This is a discounted instrument. What do you mean by discounted instrument? That is also important. Treasury bill is a discounted instrument. Commercial paper is a discounted instrument. See, I have 100 rupees. If I want to put it in treasury, if I want to put it in FD, I go to the bank and give 100 rupees. I go to the bank and give 100 rupees. I go to the bank and give 100 rupees. Now, what happened treasury bond, treasury bill? If you want to put it treasury bill, you take it. You have 100 rupees with you. Discounted instrument. So treasury bill is a discounted instrument. If you have 100 rupees, primary dealer is not accepting 100. They accept 90. Depends. When you're doing the pricing, we can have that. If you want to invest in 3 months treasury bill, they accept 100. They accept 100. They accept 90. But after 3 months time, you are given 100 rupees. That's the pattern of treasury bill, especially discounted instrument or the commercial paper as well. The primary will accept 90, or depending on the pricing, right? We will be learning how much, if you have this much of money, how much you should give. Now, understand the general pattern. Why we say it's discounted instrument is that 100 rupees you are getting after 3 months. If it is 3 months treasury bill, but you are giving only 90. Example only. But see the difference between investing in treasury bill and FD. FD banks are not saying no, we don't want 100. We take 9. No, they accept 100. 100 plus whatever the interest they are giving you for 3 months. අපි 10% කියලා 10% නම් අවුරුද්දකට දැම්මොත් 10% නම් you are getting 110 after 1 year's time. Treasury bill 1 year treasury bill එකක් දානවා නම් you have 100 rupees. You have to give them primary dealers 90 තමයි දෙන්න ඕනේ. Example 90 or it can be lesser than 100 discounted, but you are getting on the maturity 100. So that's the beauty of that discounted instrument. So we will be learning when you're doing the pricing how much you'll have to pay. That's the pricing. I have 10,000 rupees. I need to invest 3 months treasury bill at this rate. How much should I give it to them? So we'll be learning examiner, which I told you. Examiner has not tested pricing on the treasury bill as well. So we'll be learning that. That is important. Discounted instrument. Important thing, right? That is the discounted instrument, the beauty of discounted instrument. So the difference between 100 and 90, we call it, it can be capital gain plus interest. Both are there. Both are there. Capital gain and pricing, both are there. We'll be learning separately what is this. Generally, we call it capital gain, but the interest portion also is there. We'll be learning later when we are doing it, right? Now, it's a discounted instrument. There is no coupon involving. අවුරුද්දක treasury bill එකක් දැම්මොත් මාස 3කට සැරයක් you are getting this much. No, like no. Other 100 තවට හම්බ වෙනවා 100 on the maturity. You put it now. That's the beauty of treasury bill. Discounted instrument, right? 3612 zero coupon. There is no coupon. Examiner can test you. Tell me write down the two money. Zero coupon interest. Zero coupon interest. The zero coupon interest is instrument is treasury bill, and the commercial paper is also zero coupon sometimes. So the classic example is zero coupon or discounted instrument, treasury bill. Interest is paid upfront. Interest is paid upfront. කලින් ගෙවන interest. 90 you pay, 100 you are getting. So that's the instrument, the features of that instrument. And we have discussed this is a liquid instrument. Anytime you can sell it. Now, if you put it a 1 year treasury bill, I can sell it at before it's get matured. Readily available market. Profit or that's a different issue, but you can sell it. You can realize it. Now, liquidity means that you can realize at a insignificant losses. Yes, you can. You can. Liquid instrument, right? Money market instrument, auction based, risk-free rate. Government is issuing risk-free rate. So then treasury bond is also issued by the government, central bank on behalf of the government. This is another instrument, a long-term instrument, capital market instrument. Long term. Generally, we have 2045. 2045 is the highest value of the treasury bond issue, highest tenor. Now we have a 2045 bond as well, right? 2045 bond as well. So then we have 25. 25. Now the tenor range from 2 years to 25 years. It should be 25. But generally, generally we know that it is basically we go generally it is tradable instrument is within 12 months, 12 years. 2032 is the 2032 is the tradable instrument we have. 2032. That is 12 years. So others are, of course, actually not tradable. 2045, there is no actually value for this. There is no value. Now, treasury bond, you know what has happened during the bond scandal as well, right? Very important. Bond scandal also happened involving treasury bond. Treasury bond agar bandum kara gila api කියනවා. Bond agar bandum kara. So treasury bonds, there are features available that is different from treasury bonds, treasury bill. Very similar to treasury debentures. Very similar to debentures. Very similar. There is no any different. Only the issue is different. You can see that. Issuer, who is the issuer? Government of Sri Lanka, the Central Bank of Sri Lanka on behalf of the government. So that is important. Now there is a face value involving in this, but we have not seen when you are talking about the treasury bill, we have not seen anything like this, any feature like this. Face value we have not seen. Then coupon we have not seen, but everything is available. This treasury bond. Everything is available with regard to treasury bond. So that is very important to note that. So it's a capital market instrument. Liquid asset, yes, liquid asset. What do you mean by this at par discount premium? For example, we say 100 rupees. Now when you are issuing a new bond, new debenture is 100, we call it a 100. The par value. So you're issuing at par value. But if you say now you issue 100 particular instrument today, after 3 months or 1 year's time, you want to sell this. Now you are selling at 100 or below 100 or above 100. So obviously you are selling this particular instrument at more than 100. So think of the seller's side. You're selling at more than 100. For example, we say 110. So you are selling this particular bond at a premium. So more than the 100. If you're selling more than the 100, we call you are selling this particular bond at more than 100 premium. Person who is buying this particular bond is buying or the purchasing at more than 100, that is 110, is a premium bond. If it is more than 100 premium, it's a less than 100, we call it a discount. Now say there is a feature involving this treasury bond. Now today you invest one instrument, one unit at 100. For example, you invest in 100 rupees. After 5 years time, why this bond is, for example, we say 5 years. After 5 years time, you are getting the face value. Face value is what? Not the investment amount, but generally we call it 100. So this particular bond, if it is a new bond issue, alutma bond ekak නෙමෙයි නම්, anybody who is buying or selling this bond should be happen either at premium, either at discount. මම මේ බොන්ඩ් එක පළවෙනියම ඉෂුව එකේදී ගන්නේ 100 වලට. So I am the first owner, the first investor. මට පස්සේ කවුරු හරි මේක ගන්නවා නම් මම විකුණන්න ඕනේ මේක 100 වලට වඩා උඩින් if I want to make profit. But if I want to make profit is immaterial for me, then I need to realize my money, then I will be selling this particular bond at below 100. So 90. So remember that at the first issuance only, bonds are issued at par. After that, any incident, today we issue a bond at 100, following day onwards, you are not purchasing or selling at this particular bond at 100. It should be more than 100 or less than 100. Remember, if somebody wants to sell at 100, it's a different issue, but it won't happen.
Generally, we want to sell at a higher whatever the prices we purchase, right? But there we'll be learning later. When you're doing the calculation, you can see you will be generally you are intended you are encouraged to purchase as a purchaser or investor particular bonds at discounted level. We'll be learning why. For the time being, just keep in mind. Now, difference between treasury bill and treasury bond, not only the capital market, money market instrument, not only the tenor of the instrument, there are some features involving. One feature is coupon. There is a coupon involving. Every 6 month time, you are getting a interest payment for your investment. Treasury bill, do we have that? No, we don't. Treasury bill එකක් ඔයා අද දැම්මොත් එහෙම ඔයාට period එක අවසානයේදී you are getting whatever the face value. Today you put 100, you are getting today you put 90, you are getting whatever the tenor. After the tenor, you are getting 100. That's finished. During the period, you are not getting any interest. But a coupon, now treasury bond is involving coupon rate. It's involving face value. It's involving par, the premium and discount. Now remember, treasury bill is always at a discount, but treasury bond can be at par. Treasury bill not at par. Why it is should be always, remember the word, always below 100. Always. It should be always below 100. Can't be even at 100, not at par. Treasury bills are not trading at par. It's wrong. Below at par. It's a discounted instrument. But treasury bond, yes, at par possible. Discount possible. Premium possible. We'll be learning later. Is it worthwhile for me to buy a premium bond? Now say seller is getting something, meaning buyer is losing. Mama ගත්තු bond එක 110ට විකුණුනොත් I am getting. Why I am the seller? But are you getting? No, you don't get. You are the purchaser. හැබැයි මට ultimately on maturity හම්බෙන්නේ කීයද 100යි. We'll be learning later what this 100 face value. You are getting face value end of the maturity. How much? 100. You're getting සාමාන්‍යයෙන් අපි ලංකාවේ තියෙන instrument එක nominal value is 100. So we'll be learning why this 100 comes. You are getting 100. But if you purchase this particular bond at 110, but end of the period on the maturity you are getting 100, so you are losing 10%, 10 rupees. Are you purchasing this particular bond? Yes. At profit? Yes. How do you make profit? Through the yield. We'll be learning later all these things, technical words, but important. When you're investing others' money, that is your task. If you are investment banking division, you need to invest others' money in a profitable way. කෙනෙක් ඇවිල්ලා අහන්න පුළුවන් මේ ඔයා මේ බොන්ඩ් එක මොකටද මේ 110ට ගත්තේ ඔයාට හම්බෙන්නේ 100නේ. So you should have a justification. Now I have seen some auditors also querying this. Auditors also come and query this. Why you have purchased this premium bond? You should invest your money at discounted bonds. But you can justify that there are profitable way. Through yield, you can have this. We'll be learning all these things later. By pricing. When you're doing the pricing, you can have that. This is important, right? So liquid asset, there is a readily available market, treasury bill, treasury bond, you can sell anytime without having a significant loss. Important. Readily available market. There are brokers here, legalized brokers. If you want to sell this particular instrument, you can tell a broker, I need to sell this bond. Then he will find the purchaser there. Right? And there is a brokerage also involved. Right? So, initially we'll be learning this two instruments, treasury bill and treasury bond. Why we have learned this particular government instrument? When you are giving somebody's money, you should have the opportunities, you should have the investment, alternative investment instrument to invest. This is one of the important, one of the most popular government instrument for your money to invest. And remember that even if you don't have this kind of investment, I'm recommending or I'm requesting you to have investment like this. So then you can have a sense of this. Now I told you the last week. Now when you do the investment in this particular instrument, you don't get anything. You are getting only a statement. Now, for example, if you invest in shares, you don't get anything. Only the monthly statement. That is also not coming by post now. It is an email. So it's scriptless. SSSS. Scriptless settlement security system. Scriptless. Everything is scriptless. You don't get anything. So you don't know whether your investment is available or not. Everything is scriptless. So treasury bond also the same, right? And we'll be learning later when you do the pricing and all these things. How do you invest these particular bonds? What are the requirements for you to invest these particular bonds? And remember also, default risk is not there, but other risks are there by investing in government security as well. So the only two government instruments are available in rupee term: treasury bill and treasury bond. Those are the only two instruments government has to raise money from the public. Both the instruments are auction based. Now, treasury bill is a weekly auction. We have treasury bond. We don't have weekly auctions as such. Depending on the requirement, treasury bond auctions occurring depending on the requirement. Whose requirement? Government requirement. Treasury bill now every week you have treasury bond. On the requirement they announce, government announced, central bank announced there is a treasury bond auction. Please participate. Who can be participate? Primary dealers only. So can they participate? Yes. If you have provided, if you have more than 5 million rupees, you can ask one of the primary dealers to bid on behalf of you. So then what is that market we call? Primary market. Primary dealer and the central bank. That is primary market. So when we go to the primary dealer and getting treasury bill, treasury bond, what is that market? Secondary market. Between primary dealer and the investor. No central bank involved in this secondary market. So every instrument you have primary and secondary. Share market also you have primary and secondary market. Secondary market is what? Share market. Primary market is what? IPO. So when you want to purchase shares, you go to CSE, Colombo Stock Exchange. What is that market we call? It is secondary market, not the primary market, right? Not the primary market. So anybody who has question on this, these two instruments? Basically, we'll be learning these two instruments in depth once we go forward. And also I will touch on this shares as well. Now, shares, you know, everybody knows shares. Lot of this is only the introduction, touching point only we are dealing with, and we'll be learning in depth on shares. That is very important topic for you all. And there are a lot of questions will be covered with the examination past paper question when you're doing the past papers. Right? Shares, of course, we call equity. Equity is the word from US. Shares is the word from UK. Generally, we call it shares, so you can both, right? Shares is as another instrument you can invest, high risk, high return. Now, whose money you are using? Others' money. If it is wealth management, if it is fund management, your bank money also you can control, you can manage. But you can decide whether you will go for this kind of instrument. Why? Which is very risky. Now, there were some questions in your exam. Examiner tested you whether senior citizen has some particular lump sum money, after retirement, he has money, lump sum money. Are you recommending him to put his hard-earned money in shares? 5 marks is a lengthy question, right? Giving a lot of huge paragraph, and that is the essence of this question. Are you recommending senior citizen to invest in shares? The answer is black and white. No. Why? High risk, high return. But the senior citizen needs constant income. So we are not recommending to put shares. Recommended to invest in shares. Now, share market, Sri Lanka, now trading at a lower level, below the net net asset value. Now we actually crossed the 6,500 now. It was 7,500 level ASI. So this is very good economic indicator of a particular country, whether when the stock market is going up, when the stock market is performing, it says country's economy is going well. That is one of the indicators, and not the only indicator, but one of the indicators. Share market price is going up, it says economy is running well. Now you know there is a separate minister for this capital market. So we are expecting capital market to boost, capital market to expand. So Cabral is the state minister for this capital market. So when you say capital market, now you know that what are the instruments available in the capital market? Shares, debenture, debt market, the capital market. Debenture, capital market. So share market is the capital market. Right? So remember that for us to have the better capital market or the performing capital market, especially the share market, we need foreign investment. Now every day you can see foreign outflow, net foreign outflow every day. Investors are pulling out their investment. So all why? Same thing, same downgrade, same impact of downgrading. Why people are moving? We have political stability. The foreigners are highly worried about the political stability. Now we have political stability. Now why still foreigners are not coming to Sri Lanka? Why still the foreigners are pulling out their investment out of treasury bill, treasury bond market, share market? So the problem of debt sustainability. Problem of debt sustainability. So whether we will be in trouble when the debts are due to be settled. So that the indication is there. So they want to pull out the investment. There are some investors who come into Sri Lanka to invest, but lot of investors we see are retailers, local retailers. Now there are no malpractices happening at this moment. It is highly regulated. The apex body is SEC, Security and Exchange Commission. Then below that you have CSC. Right, so regulator is now banks regulator. Who is the banks regulator? Central Bank. Share market regulator, CSC. I'm sorry, SEC, Stock Security and Exchange Commission of Sri Lanka. Right. So I'll be showing it to you how the share market is functioning with then demand and supply and all these things. Now remember the share market. Now when you purchase a share from the CSC by meeting a broker, first you have to meet a broker. Then it's available. There is an app available, CSC app. Then you can fill the form there. It is also online. You don't want to put any documentary evidence. Everything is online. Opening a CDS account. What do you mean by CDS account? Generally we open a savings account, similar thing, where your shares are deposited, where your shares are recorded. We call it CDS account. It is also online. Filling the application is also online. Right. So then remember that these shares, if you're purchasing a share from the share market, meaning you purchase ordinary shares. There are many types of shares that is also available in your tools later. Ordinary shares. When you have ordinary shares, it means you are a true owner. You are a true owner. But I get in a Jones case. Controlling stake is not there, but you are a true owner. So we'll be learning voting, non-voting, all these features we'll be learning later when we are proceeding towards. Right? Any question you have before we wind up the class today? Right, then we will wind up the class. Then we will start next year from this point on. Right, I'll be showing all these advertisement, government issued advertisement next week. Right. So thank you very much for listening to me. Right? Thank you.